Hi, welcome. It's Mary Ellen McGonigal here, Senior Managing Director of Equities with your Weekly Edge show. Today, we are going to take a look at some of the more impactful news that drove stocks lower last week. And then from there, take a look at where the markets closed. And beyond that, take a look at the underlying markets as far as broader sectors, industry groups, which areas were really on the move last week, unfortunately, primarily to the downside. From there, viewer question of the week. And that question will be answered throughout today's show with, at the end, some prime examples. The question has everything to do with why have the markets shifted into such a more negative mode, certainly over the near term, and we will get into that. So let's take a look at some of those headline news. First up on Thursday, this was one of the items that really shifted the markets, which had headed into Wednesday with gains. Fed Chair Powell spoke to the IMF, and in that discussion said that in the Federal Reserve's next month's meeting, that they anticipate to raise short-term interest rates by 0.5 percentage point. And he really left little doubt to that possibility. In turn, we did see interest rates, bond yields rose to their highest level in 3 years. Another domino effect was the fact that the U.S. dollar continued to trade higher. We will get into which groups were most impacted by these two moves. And then also earnings season was another primary driver, particularly those stocks that sold off the most. A lot of that having to do with companies guiding lower for the remainder of the year, and investors wanted no part of that. Next week, earnings season heats up further. We have a number of those FANG stocks that are due to report. So with that, we anticipate volatility to remain quite high in these markets. From here, let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500. And you can see this is Friday's price action really was quite negative, down almost 3%, wiped out any potential gains and then some. Our outside momentum indicators are remaining in negative territory. The RSI below 50, trending lower, and then the stochastics negative territory as well. So certainly very, very cautious with a negative outlook on the near term for the S&P 500. From here, I do want to share with you a look at the Nasdaq Composite, because we did hit bear market territory again. Nasdaq down over 20% from this peak back here in November. And while it's more a statistic, it can be very psychologically impactful as it relates to the outlook near term for the broader markets. Your outside momentum indicators also in negative territory for the Nasdaq, which was down 3.5% last week. So from here, let's dig in, take a look at some of those areas that were more negatively impacted within the markets. And I'm going to go over to the S&P 500, those 11 underlying sectors. I've added this relative strength indicator. I'm sorting the list in descending order so that these 2-month daily price charts on the upper left quartile are those areas that are relatively stronger. They're holding in, certainly relative to the weaker areas down in this quartile. So up in the forefront, for those that follow my show weekly, welcome back. You will see that it is primarily defensive areas up here in the forefront. This is consumer staples, REIT stocks, and utilities. And certainly in a rising interest rate environment, these names will fare better also during periods of uncertainty. In addition, they are coming out with strong earnings despite high inflation. So a number of factors that are keeping these three sectors elevated. But let's go ahead and move forward and take a look at some areas that had been holding up well, but then on that Thursday and Friday sold off very sharply. And this is the materials sector, XLB. A lot of this having to do with the rise in the dollar. A lot of these commodity metal related stocks sold off really quite sharply. Also, we can see the internet related communication services sector, XLC. A lot of this is Netflix, down 35% after reporting numbers where subscribership had declined. Facebook is another heavyweight in this industry group, and this stock, Facebook, was down 12.5%, and they are due to report their earnings next week. We also want to take a quick look here at technology. It actually was down 2.4%, so only a bit worse than the broader markets, but we can see that it remains in a very confirmed downtrend. Microsoft and Apple are the two heavyweights in XLK, and both of them fared a bit better than the broader markets. So from here, I do want to go on and take a look at some underlying industry groups as a way to really give you a sense of just what did take place last week and what you can potentially look forward to going forward. So first up here is a look at the yield on the 10-year Treasury. I talked about Fed Chair Powell's comments pushing rates higher. So there was a lot in the way of response to that. Higher growth stocks do not fare well generally in a rising interest rate environment. So we did see growth overall getting hit. And then also I did mention to you higher interest rates does tend to push the US dollar higher. This is because foreign investors are attracted to the higher US yields. They do use local currency, which in turn pushes the dollar higher. From here, we can take a look at some of the impact from that higher dollar. And first up, we can see that Brent crude. Now, it was not down as much as other commodity areas that would be negatively impacted from a strong dollar. Certainly more telling would be this decline in gold, as for instance. Again, that higher dollar pushing those commodity-related stocks lower. Let's take a look at volatility. This also had a big spike today on Friday. We're now back up in this 26 range. There was certainly a period where we did appear to be decompressing, if you will. Volatility was dropping, and as mentioned in prior shows, below that 18 level is generally pointing to a more stable market environment. And this big spike today is not good news generally as it relates to the broader markets. We want that fear index or volatility to subside and allow the broader markets to really stabilize and eventually trade higher. From here, I did want to share with you other areas, and that is the VTV. Now, this is the Vanguard Value ETF, and I wanted to highlight the fact that value stocks got hit over the last 2 days, equally with growth, and a lot of that has to do with earnings. I'll share with you some of the more impactful names there. Let's take a quick look at Vanguard's growth ETF, and here's that same 2-day drop. So really the decline over the last 2 days was unfortunately rather broad-based. So from here, I am going to share with you a view of some of the top 10 performers and the top decliners on the S&P 500 today. And the purpose here is to share with you some of the most impactful reasons why stocks were on the move on Friday. So this is from stockcharts.com, their first initial page interface. You can get this type of list really with any trading platform I would think that you use. But for now, with this S&P 500, I want to examine those stocks that were up the most despite the S&P being down almost 3% on the day. We can see some pretty big movers here. I'm going to take a quick look at a 2-month daily price chart view and share with you certainly these first two top movers and why they were on the upside despite a tough market. This is Kimberly-Clark. The company came out with earnings today, and they were able to fare quite well despite high inflation. They've been able to pass increased cost on to their customers. So let's take a look here. The stock gapped up. It closed up 8%. At one point, it had been up more than 10%. Very high volume on this gap up. Now, if we were in a more confirmed uptrend in the broader markets, I would say take a close look, because this gap up into an eventual base breakout when the markets are in good standing is a very powerful move and points to further upside. But certainly this market is going to be an exception. Let's take a look at another the second top mover today in the S&P 500, and this is SVB Financial. Stock ended the day up 7.5%. And again, all about earnings. So really what I'm trying to highlight here is the fact that earnings are and have been continuing to be the primary driver of these stocks. Let's take a look at a company that reported on Thursday. This is United Airlines, UAL. Gap up into a base breakout, up another 1% on an otherwise dismal day. So on heavy volume, really highlighting the fact that while we are seeing commodities and other areas drop due to higher interest rates, earnings is the overall primary driver for big moves in the market. So let's go ahead back and take a look at that S&P 500 for today, Friday. Take a look at the percent down. These are the names that were down the most today. And I will go ahead and share with you this 2-month daily price chart view for here as well. And first up, I will share with you a company that did come in with numbers that were good, but we can see that the stock had a very precipitous drop here. This is Freeport-McMoRan FCX. I hope I said that right. And the reason for this sharp decline here is the company guided lower as it relates to copper sales. So they cut their outlook. Even though earnings and sales were above estimates, their declined or decreased outlook were really what drove the stock lower. So that is something that we can anticipate to potentially continue as earnings season continues to heat up. Let's take a look at some of the names that were down the most. First up here is Hca Healthcare. And the reason for this drop, this is a hospital stock. The company guided earnings and sales lower going forward due to increased labor costs. And this is something we can unfortunately anticipate within other industries and other companies as we proceed through earnings season. Let's take a look at another stock that was down. This is the third biggest decliner on the day, UHS. Now, the company did not report earnings. They are due to report on Monday, but they are in the same industry group as HCA. So you're seeing that trickle out effect where companies that come out and guide lower due to economic constraints, you are seeing deterioration in like stocks. So from here, I did want to share another name that was down on guidance and really pushed other stocks in this group lower. This is Intuitive Surgical, ISRG, a medical product device company. The stock was down 14% today, and it was all about guiding cautiously as it related to earnings for the remainder of this year. Let's take a look at some of these other big decliners for the week. This is Stryker, SYK. They have not reported. They are due to report on Thursday, but it is another medical device company, and in tandem with ISRG, a very sharp drop. Last up is Dexcom, DXCM, another medical products company that is due to report on Thursday. So the company has unfortunately entered into a confirmed downtrend. So as you can see, we do have a lot in the way of cross currents, both headline related and news, but the real movers and shakers in this market are being pushed to the up or the downside due to earnings reports. Everyone have a great weekend. If you haven't already, use that button below and you can trial my MEM Edge report. It's all about keeping you on top of the markets as well as underlying dynamics similar to what we reviewed today. Have a great weekend. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.